So, Walter, you said earlier that this was more of a technical correction than some fundamentals. As you look at it, would you make any investment decisions differently today than you would have made a week ago, or you're on the same path?
No, I think, in fact, the door has been open for some quite attractive opportunities. Again, when we look out over the next 6 to 12 months and even beyond that, we see a very strong economic fundamental backdrop for stocks. So that would lead us into the cyclical areas of the market, like financials, industrials, materials, consumer discretionary. I think there are opportunities in all those sectors where companies have already reported. They've already given you a favorable outlook for earnings where you can take advantage of these pullbacks, in some cases which are in excess of 10%.
At what point, if that's on your, so specifically in terms of sectors that you're looking more closely at, where's the opportunity? Because if you look at the last 5 days, it's been healthcare, it's been energy. If the value trade was going to come out, you would think you'd want to buy energy right now.
Yeah, energy's been hit very hard over the past week or so, and that would definitely be one of the sectors we would look to for opportunity. BP was out overnight. That's a holding that we have with a great quarter. Stock will probably be down and caught up in the market sell-off today. That would be an opportunity there. Again, I think growth versus value is a sector discussion, as you mentioned, and I think those cyclical value sectors like financials, industrials, energy, materials are very attractive on this pullback.
Walter, does it make you hesitant at all? And in the sense of, okay, those are great investments to make. You have some real upside there. Do you want to hedge a little bit? Do you want to make some other investments in case it goes the other way? Because we've just seen it can go in surprising directions.
We definitely believe in a diversified portfolio, so we're going to have exposure to other sectors of the market as well. And from an asset allocation standpoint, I do think it's important to have a balanced asset allocation that includes stocks and bonds. And you saw that certainly in spades yesterday, wanting to have that. But at the end of the day, at this point, I don't think it makes sense to really have knee-jerk reactions. As painful as this process is, I don't think it makes sense at this point. Now, if this were to broaden out and were we to see other asset classes kind of get caught up, like the dollar spike, gold spike, rates really start to move down, that would give us some more concern. But at this point, we're not seeing that.